Michael, great to have you on the show. We got shares of Costco up almost 5% right now. Your takeaway from the earnings report we got after the bell yesterday, and whether it changes your investment thesis here.
Well, they obviously had a great quarter, and the stock's having a terrific reaction. I thought what was important from the call is hearing Costco's view on things like supply chain and inflation, and a couple of amazing statistics. 79% of their import containers have been delayed by an average of 51 days. But Costco's been able to overcome that and work around it, and so I think that's a testament to how the company operates. On the inflation side, they're seeing 4.5% to 5.5% increases. That's more than they had expected. Some of that is being passed through to customers, but they are absorbing some of it. And they do have some structural advantages that are helping them offset it. So clearly they're doing a great job, and I think the stock is being rewarded for it here.
Yeah, and I believe they signaled that they may increase some prices going into the new year again as well. I mean, we know the consumer's strong. We've been hearing about it. We've been seeing all the macro data around that as well. And we know that many companies, consumer-facing companies, have been able to raise prices, be it for all of their costs or even just some of their costs, push some of that out to their customer base as well. At what point does that dynamic start to tip over or change? I mean, if we continue to see inflation numbers and Costco, as you just mentioned, 4.5% to 5% range for this past quarter. If we continue to see inflation growth like that, at what point does that begin to actually dent demand?
Yeah, I'm getting a little concerned that that's coming, and at some point in 2022, these inflation numbers we saw this morning, particularly the food at home inflation, is now rising as fast as it has since the pandemic began. It's been accelerating for 4 or 5 straight months. Some of the food retailers, Costco did absorb some of it. And again, their gross margins look better than they have the previous few quarters, but they are down year over year. Walmart and Target, they're starting to absorb some of the increases. So it is starting to pinch the margins a little bit. And as I think about 2022, some of the stimulus that we saw in 2021 is going to go away. And so I think that might make it a little bit more difficult for consumers to absorb themselves at these higher costs.
Hey, Michael, on labor, Costco's famous for always having industry high comp. But when you look at the very small but important vote at Starbucks, Kellogg, Deere, I wonder if you're beginning to fold in the prospect of maybe some labor action at Costco down the road.
Not specifically labor action for Costco, no. But what we do have in our model and do expect is that their labor rates will continue to increase. You're absolutely right, Carl. They do pay quite great salaries, and that's continuing. And so we are seeing higher SG&A on a dollar basis. Now, their sales are so strong, of course, they've been able to leverage it. But we do think there'll be persistent labor cost increases, not just for Costco, but for others, some of their competitors. BJ's, for instance, is raising wages and trying to close that gap relative to Costco as well.
We're largely through this earnings season cycle with the retailers. You have a neutral rating on Costco, but are there other names that you cover that would present buying opportunities right now at these levels, given what we know going into 2022?
Yeah, actually, we put out a report earlier this week where we highlighted 6 predictions for 2022, as well as what we learned in the third quarter, as we are now just through earnings reports. Really another remarkable quarter in the third quarter where trends on a 2-year basis were as strong in the third quarter as they were in the first and second quarter. But as we thought about our predictions for 2022 and best ideas, actually one that we talked about was BJ's. We think the warehouse model is terrific. We think BJ's has improved quite a bit from pre-pandemic. All the new members that they've gained and their growth in members is just as strong as Costco's, makes those pandemic gains sticky, yet it's trading at half the multiple of Costco. So that's one we like. Another one we highlighted is Ulta. Interestingly, their key category, which is prestige makeup, really hasn't recovered yet to 2019 levels. It's one of the few consumer areas that hasn't fully recovered. So they still have that recovery story ahead of them, and we think that'll be a positive.